Hello and welcome to this video where we're going to do a couple of problems on horizontal and vertical analysis for both the balance sheet and the income statement. And the first problem will take care of the balance sheet, so horizontal and vertical analysis. And then in the second problem, we'll do horizontal and vertical analysis for the income statement. So let's jump right in. I tried to set my spreadsheet up ahead of time so that we wouldn't have to waste time. All right, so we have hypothetical comparative condensed balance sheets of Nike are presented here. So we have our assets, our liabilities, and equity, and we have 2025 and 2024. We need to prepare a horizontal analysis of the balance sheet using 2024 as the base. We also need to show the increase or decrease. And then we need to prepare a vertical analysis of the balance sheet for Nike for 2025. So horizontal analysis, we're looking at information over time. So first, because this is an official balance sheet, let me set up my heading because every balance sheet has to have a heading. So we start with Nike, the name of the company, the title of the report, and we can call it a condensed balance sheet, but I'm going to put in parentheses here, horizontal analysis so that I know what I'm doing. Horizontal analysis. And then the balance sheet uses the language May 31. Oh, dang it. There we go. All right, now I'm just going to recreate what is here, which means I also need to remind myself that this is in millions. So in recreating what is here, I'm going to have my 2025 numbers, my 2024 numbers, and then I'm going to have the increase. Oh, spell that wrong. Increase or decrease. And then, oh no, I don't want that looking like that. I want that looking like this. Increase or decrease, because that's going to be true for both of these columns. Of course, I forgot to put mine. And I'm going to have my dollar change, or you can call it amount, either one. And then I'm going to have percent. Now, let me center this. Took me 2 hours to find it. I need merge and center. There it is. And the rest of this stuff can just be centered normally. All right, here we go. We have our assets first. We have current assets. And then, oh, that is not how you spell liabilities. Liabilities and stockholders' equity. Then we get our current liabilities. Long-term liabilities. Hard time spelling liabilities today. And stockholders' equity. And then the total. All right. Now, I know it seems like this is going to take forever because we're typing everything out from scratch. But it's okay because we're building it now. And then when we get to the vertical analysis, then we can kind of copy some of this over. So it's not going to take us as long as you might think. All right, so we have assets first. Now this is the hard part where I have to do the numbers. 97, 34, 1958, 1558, and 3277, 1280, and 8693. I'm gonna do the same thing for 2024. Just pick up those numbers. And it is not 33, 88, 39, 1891, 17, 13, 33, 22, 12, 96, and 78, 25. All right, let me do some formatting. Because I want these to actually look like regular numbers with commas, no pennies. And now I can find my sum, which on this silly screen, whatever. I'm not going to look for my shortcut. I'll just type it. My sum. 13. Oh, I messed up. It should be 13,250, 97.34. 1958, not 1858. I'm sure you saw that mistake. And then let's see, 12,443. Good, 12,443 and 13,250. All right, now we can find the dollar change. We find the dollar change. It's always the current year minus the base year. When we find the percentage, we divide the dollar change by the base year. Now, this is the best part of this. I get to make all of these formulas. So I get a difference of 895. Copy that down. Oh, dang it. I should have copied it down one more time. One more time. And then we're going to do the same thing for our current liabilities. Copy that down. And now, before I start getting confused, let me put in some single and double underline. Now, for the percentage, we're just going to take the dollar change and divide it by the base year. And I need to convert that to a percentage. I wonder if they told me to take it out to a certain number of places. I'll take it out one place. And then we're just going to copy down. Take that dollar change, divide it by that base year, and then make that a nice little percentage. Oh, going the wrong way. With one decimal place. And we copy and paste that down. Now, I'm not going to add single and double underlines underneath my totals for my percentages here because I'm not necessarily getting totals. I'm really focusing on that percentage. Now, that I have all my numbers in there. I can clean up my report. Come on. Clean up my report by centering my heading. The individual line items in my heading. And I'm sure you've already guessed that I also need to go back and add some dollar signs by the first number in the column and the last number in the column. And since assets is a major section, that's why I'm putting that dollar sign by those double underlines, so I'm not totally thrown off. And this is a dollar change. But of course, I don't need any percentages, any dollar signs by the percentages. Now, that is my horizontal analysis, making comparisons across time, comparing 2025 to 2024. Now, that was great fun. Now it is time to do The vertical analysis. With the vertical analysis, I'm comparing everything to a base amount. So everything on my income statement on my balance sheet, it's going to show up as a percentage of total assets. So to do the vertical analysis, I'm just going to cheat just a little bit. Well, it's not really cheating because I did build this myself. We're going to copy and paste. Let me get down here. But of course, I'm going to have to change a few things up. Now, first of all, the first thing I need to change is the fact that this is a vertical analysis. So I changed that word to vertical. Now, the next thing that I need to change is I'm going to have to get rid of some of my columns here because I need this to be gone and that to be gone. I can leave that as percent. I need that as 2024. And we're going to go ahead and delete that. Oh no, come on. And we're going to move these numbers from 2024 over here because we are finding our percentages in terms of expressing everything as a percentage of total assets for each year. So we have our 2025 numbers and our 2024 numbers. Same information, just shifting around the columns to save us some time. Now, for the percentage, oh, this is where the formula gets really fun because I get to anchor my formula. I get to use the 9734 and I'm going to divide it by total assets. But I'm going to divide it by total assets every single time. So that means I need to use F4 to put the dollar signs in front of the column and the row. That locks this formula or this cell so that when I copy down, I do not have to worry about the bottom number copying down. That means every single number is going to get divided by the 13,250. Now, let me change this so that it shows up as a percentage. Percentage. There we go. Check. Yeah. Let's take it out to one place. Oh, he's going to. All right, so now we're going to copy down. And of course, that should be 100%. And then we're going to do the same thing for current liabilities. We're going to take it and we're going to divide it by total assets. But we're going to anchor our total assets cell D30. And I got to change that to a percentage and increase my decimal. And then we're going to bring that down. Now for this one, we'll put my single and double underlines around it because I am doing math in terms of adding up those percentages and determining that it is 100%. Now we'll do the same thing for 2024. Let's take the 8839 and divide it by total assets, and we're going to anchor that. And we get to copy down. And then for current liabilities, we're going to take that and divide it by 2024 total assets in F4. Page 30, okay. And again, we can throw in our single and double underlines. And here we have a vertical analysis where we're comparing everything to a base amount, also called a common size statement. Don't forget that it's called a common size statement. Now that takes care of the balance sheet. Let's move on and do the income statement. Oh, that's small. Let me make this a little bit bigger. so that hopefully I can see it. Okay, come on. All right, so now this time we have the comparative condensed income statements of Delaney Corporation. And we need to prepare a horizontal analysis of the income statement using 2024 as the base, show the amounts of increase or decrease. And we need to prepare a vertical analysis of the income statement data for both years. So again, we're going to do the same thing. We're just going to recreate what is there, similar to what we did before, only again, it is for an income statement. Condensed income statements. And we are going to call this horizontal analysis. That's not how you spell that. Horizontal analysis. And the income statement reports on information over a period of time. So we use that language, December 31 for year ended December 31. And let's see if I can set this up right. I don't think I have enough columns. Let's make that a little bit smaller. Let's see if I can make my columns a little bit smaller. Actually see something. All right, I think this is a comparative income statement, 2025, and then 2024, and then I need dollar change, and I'm going to type up here increase or decrease, and this is the percent. All right. Okay, let's merge and center that, and then let's center this so it looks nice. And then we can start recreating what is here. Oh, this one's going to be much shorter because we don't have as many line items. So net sales minus cost of goods sold gives me gross profit. Then we subtract out all of our other operating expenses. And then we arrive at net income. Net sales was, oh, this is the hard part, 598, 477. And I'll put in a formula there in a second, and then we'll make that 80. Okay. So net sales minus cost of goods sold gives me good 121. At least I got those numbers right. And then 121 minus 80,000 gives me 41,000. Oh, those numbers are driving me nuts. Let's add in some commas, some proper formatting so it can look nice. All right, now let's do the same thing for 2024. We have 500,000. And then 420. And what I say? We'll skip that one because we'll put it in a formula. And then 44,000. And I just put in a formula to make myself a check figure because I often switch around numbers and type the numbers in incorrectly. Good, 80,000 and then 80,000 minus 44,000 gives me 36,000. Okay, let's make that nice. With some commas. Get rid of the pennies. And then, oh, I got to add in some single and double underlines here. Because I'm confused already. Cost of goods sold minus, or net sales minus cost of goods sold. There we go. Okay, that looks nice. Now, let's find the dollar change. Remember, the dollar change is the current period minus the base period. That ensures we get the correct pluses and minuses for our increases and decreases. So now, this is perfect. We can just copy this all the way down. Now, for the percent. The percent is the dollar change divided by the base year of 2024. Now, that doesn't look like a percent. And let me take that out one place. And let's pull that down. Okay, now let's add in our single and double underlines because with all that, we're done. Excel makes this so much easier. And I know that when you get into Wiley Plus, it's very easy to just sit there with your calculator and then just plug the numbers in. And the bad part about that is that if you make a mistake, you don't have that track record. You don't have the results there to follow versus if you do it in Excel first and then take your Excel file and plot the numbers in, then you always have that point of reference if you have made a mistake. All right, I'm missing something. Dollar signs by the first number in the column and the last number in the column. And I also need it for my dollar change column. And then for my percentage column, that one looks good. Let's center the heading. And we're good to go. All right, now we can move on to B, where we need to do a vertical analysis. And again, this is great fun because all we have to do is build off of what we did before. We can copy and paste. Of course, we have to make some changes because instead of this being a horizontal analysis, it is a vertical analysis. Now, for a vertical analysis, remember we got to make some changes. Now, I'm going to go ahead and delete all of these. And I'm going to change this to 2024. Because on that vertical analysis, on this common size statement, we're going to express everything as a percentage of sales, but we're going to show the year, then the percentage, then the year, then the percentage. So that means I got to copy this stuff over. And then I can just delete that. Need delete, and I can delete that. All right, now this is a fun one because this is where we get to use our formula and anchor. So we are going to take everything and divide it by net sales. So net sales is my starting point. And I'm going to take that and I'm going to divide D18 by D18. The only difference is I need to make sure I anchor so that when I copy, my cell here does not change. So we're going to F4. And oh, got to make this look like a percentage. And I think I'll take it out one place. And now I can just copy down. It's perfect. 6.9%. So for every $1 we have in sales, they get to keep 6, or it's closer to 7 cents in profit. All right, now for this one, remember we do add in our single and double underlines here because the focus is on that particular percentage and everything adding up and coming out perfectly. Now we're going to do the same thing for 2024. I need to delete this increase or decrease language. And for 2024, I'm going to take H18 and divide it by H18. But I got to anchor it. Where's my F4? There it is. That looks perfect. So then I can just copy that down and add in a little single and double underlines. Oh, what did I do here? Did I do it? There it is. And the end. There we have a vertical analysis or a common size income statement with everything expressed in terms or as a percentage of sales. So we notice in 2024, they got to keep 7 cents as profit for every $1 they had in sales. And in I got to get rid of that. There we go. Call that percent. That makes more sense. And in 2025, it went down they only got to keep 6.9%, which is quite interesting because if you notice, profits went up. Cost of goods sold went down, but the operating expenses increased as well. It's great that they were able to improve their margins, but it looks like they need to get some of their operating expenses under control again, like they had it in the past, because if they were able to increase their sales and increase their profits, then I would expect that profits should be a larger piece of the overall pie, but it isn't. So just looking at the dollar figures doesn't really tell the entire story. Looking at the percentages, it feels like we improved in 2025, but in terms of net income, look at that. We went from 7 cents, keeping 7 cents, to keeping barely 7 cents, 6.9 cents. All right, I hope this helps you when you go and try to do your homework. If you have any questions, you can always reach out to me. I so appreciate your time and attention, and I hope you have a wonderful day.